one break in the middle, but I don't want to take too much of your time at the beginning because I'm stealing from the people who showed up on time and giving it to the people who did not. Okay. The classic financial statement analysis, I generally look at it as financial statement analysis with a historical perspective, but how do you make money? You make money predicting the future better than others. Okay? So we will be analyzing financial statements on a historic basis. That'll be part of your final exam. But you also have a project due on the day of your final exam, which will be a pro forma statement or financial statement for a real estate asset. You'll be building and I'll talk a little bit more about it, 4-unit multifamily. I will give you a webinar on how to do that. I will then give you a write-up, which is a chapter from my book, I'll give it to you for us, telling you how to build the financial statements you'll build in forward-looking ratios. So, you will come out of this class with skills. Okay? I am a big person about skills. Okay? If you want to be smart, go get a PhD. If you want to make money, stay here. Okay? That's nothing against the PhD. Okay? That is absolutely nothing against the PhD, but I'm assuming you're here because you want to make money. Okay? If you want to pontificate about how to make money, go get a PhD. Nothing negative, okay, about that. Just different focus. MSF Candidacy, there's my name. You are welcome to call me 24 hours a day. It is unlikely I will pick up the phone. Okay? You could be a client. I may not be ready to address your question. I don't know who you are because I don't have your program, so chances are I won't. But you can email me 24 hours a day. Okay? I generally sleep between 1 and 6, maybe 1:30 and 6. So you won't get me then unless I have a meeting or some sort of conference call with Asia, in which case I will be up. But I'm pretty responsive. Okay? I'm pretty responsive. Or at least I'd like to be pretty responsive. If you're going to send me a model, if you're going to send me some sort of write-up and you haven't cleared it with me first, I will delete it. Okay, I've lost 2 hard drives. Okay, there's no chance I could lose another one because I'm so packed up. Okay, but if you don't send me something in PDF format and I don't know it's coming, you just get deleted. Okay, if I do know it's coming, I open it up on the backup computer in my office. Okay, but nothing gets to my main computer. Textbooks, has anybody purchased it? Financial reporting, financial statements, do you have it with you? No. If anybody purchased it, have it with you. Okay, that's fine. How much was it? 40-something dollars, okay. Are you going to read it? We all have enough trophies. I give you all the material you'll need for this class. All right? If you're not committing to read it, don't buy it. Okay? If you want to make money, buy it. You need to learn everything in it. You need more knowledge than the next person. Okay? But let's be honest. Don't spend $40. That's, half a night of beer drinking. Okay? Drink your beer. Enjoy yourself rather than have a trophy or something you're not going to use. I recommend purchasing it, reading it, again, cover to cover. If you're here to make money, again, you want to know more than everyone else. HP 12C calculator. Does anybody have one? Okay, this is the platinum. You can get the platinum or you can get the normal one. Okay, you have a choice of reverse Polish notation or non-reverse Polish notation. Okay? I do require the use of this calculator. You will have mortgage calculations on your exam. Okay? Why is that important to me? Because where do they really teach you mortgage calculations? Nowhere. But yet, what is the largest asset most people have on their balance sheet? Real estate. What is the number 1 structure for a mortgage? It's called a constant payment mortgage. It's right here. What is the second largest asset on most people's personal balance sheet? Fair enough. Fair enough. I was thinking car. Okay, but regardless, student loan, that same thing, constant payment mortgage. People don't know how to use it. Okay, so we will do that. The reason I insist on these P12C before somebody asks if they can use their CIDA something, skills. When I'm in Kuala Lumpur, when I'm in London, when I'm in Boston, when I'm in Sao Paulo, this is the calculator on the board table. Okay, so if you forget your calculator and you can't use it, you look like a buffoon. You do. Okay? It uses a different type of algorithm called RPM, reverse Polish notation. Basically, it goes from the inside of an equation out. You need to learn it. Okay, so what I will do on your exam is I will ask you a question that deals with the mortgage calculation. I will ask you for the RPN HP12C keystrokes to solve. So if you give me the right answer, it's a 0. You have to give me the keystrokes to solve the problem. That's how I get you. Okay, that's how I force use of the 12C. I don't answer the solution, I answer for the process to get the solution and the keystrokes. I've been completely transparent, so, when you see it, don't be like, oh, I can't believe you're doing that. Okay? How did I learn the 12C years and years ago? Flew to Europe and back, read the manual, did all the problems on the way there, did the same on the way back, boom, you're an expert. Okay? It's not difficult. You all got in here, you can all do it. The other issue is, how much is your degree? How much? 75,000. I'm asking you to buy a $60 calculator. Don't bemoan me. Okay, $60. How many times do you piss that away? What is that? 3 scotches? Okay? What you drink is a chew crap. Okay? So I'm asking you for a lifetime skill for 3 scotches. It's not a bad deal. Financial Times newspaper. What's your degree? What's the F stand for? Finance. Okay, so you should do daily reading in finance. I'm not asking much. Okay, I will summarize the paper for you on a daily basis. I recommend you read it cover to cover. You want the job coming out of here with 6 figures or more or whatever you want, you need to have more knowledge than the next person. When is today's paper published? 8:30 p.m. Eastern Standard Time the day before. You should be reading tomorrow's paper tonight. Okay? When should you trade on it? You can trade on the futures market or OTC markets tonight for tomorrow's opening. Okay, George should have told you how to do that. You want today's knowledge, or you want knowledge today for tomorrow. Okay? Before you go to bed, all right? What do I do if I'm getting older, I get up in the middle of the night to go to bed. What do? I check the European markets on my way. What do I do if there's a crisis? I don't go back to bed. Okay? HBS case study, Revere Street, $6.95. You can steal from the internet. Having written half a dozen case studies myself, the person earned their $6.95. I would encourage you to spend it. They earned it. Okay, it is a 4-unit multifamily. Okay, it is what I'm going to be giving you access to a webinar where I actually build the pro forma for you. Okay, read the case study. Your final project is you have to take that model and add on the financial statements, balance sheet, cash flow, income statement of retained earnings, and look at 10 years of forward-looking ratios. So you will leave here with a skill of knowing how to build a real estate pro forma model with financial statements. Why is that so important? How do you make an IRR? How do you make an infinite IRR? The holy grail of finance. How do you make an infinite IRR? You have 0 CF0. Think about it. You use other people's money in a project, and you get a return. That's an infinite IRR. It's the home run. What do you have to do to achieve that? You have to put together the financing package, the business plan, the strategic plan, etc. So I'm giving you the skills, or I'm requiring that you have the skills to build the financial statements yourself from scratch. What do most people do? They take an existing model, they edit it poorly, and pass it off as their own. You'll be able to start from a blank spreadsheet. Sean's outline of financial accounting. I do recommend it, but basically your quiz, which is really a 20% exam, is going to come almost directly, I'll change the numbers, out of the Sean outline. I give you complete transparency to the degree I can. Okay? Do the practice problems that I'm suggesting. The quiz is 20% of your grade will be very, very similar. Okay? Complete transparency. I don't try and trick you. I will get you, and I'll tell you how I'm going to get you, like with the HP12C, but I will not trick anyone, and I will not be opaque. Class, Friday night, 6 to 10. Sorry you're spending your Friday night with me. Okay? I'm sure you have, more enjoyable things. Maybe not better, but more enjoyable things to do, but I'll try and make it as enjoyable as possible. But I will also focus on giving you skills for this prior year. make money. Let's not bullshit about this learning crap. Okay? Learning is a vehicle to making money. When I sat in your chairs 14 years ago, I owned a 96 Accord. You'll never find a greater fan of this program. You'll never find a greater fan of George DeBoer. I owned a 96 Accord. Okay? Where do I spend my days now? Beach. I spend my weekends at the beach. Okay? A private beach that I own with a house. I'm thinking about what to name the vineyard that I'm starting on the 100 acres that surrounds it. Where do I spend long periods of time when I have it? When I have about 7 days, where do I spend it? Europe. It's overrated. It's too expensive. I have a private golf course in the Caribbean. When I'm not there, where am I? I'm working on my house in Puerto Rico. My point, all those skills came from here. Okay, good question. I don't work at all, I'm retired. Okay?
How long does it take to amass a wealth
In 7 years after leaving this program with the skills that Jabor gave me, I had enough money not to work. Meaning I had enough passive income coming in to feed myself. Actually, we're shorting 7 and 8, the overall market, 7, 8, and 9. The overall market. I'll tell you the strategy I used, I won't tell you exactly what I did. Okay. But the point is, that's how adamant I am about this program. Okay, you know, the physicists have Einstein, you guys should have Jabor's space. Okay? All right, I earned an A- in this class. I'm still bitter about that, okay? But, you know, I've done well since. So you're not going to find somebody who is a greater fan and wants you to have the skills. Okay? And again, I got an A-. I didn't get here because of my grades. I got here because of what? I learned the skills. You're going to have projects in this class. I'm going to allow projects of up to 4 people. When I was in a group, okay, who did all the work? Me. Why? Because I wanted all the knowledge. Very, very important. The other issue is, again, this program, if you choose, you can go into public service, and God bless you, that's not mine. Okay, I'd rather have wealth. But by the way, how much debt do I have? What are my greatest concerns in the world? Russia, Israel, you know, major issues that will hit my portfolio. None of the bullshit crap. My problems worth having. You will be my problems. Problems worth having, but you're not really problems. Familiarize students with corporate financial statements and understand how to underwrite investments and credit assessment. How do you evaluate something from a credit assessment? How do you evaluate the financial worth? Okay, you're all probably young and single. One of the things you should think about when you meet your special someone is how do you underwrite them financially? Okay, you laugh. Okay, it's an accurate approach. Okay, you know, somebody with a heck of a lot of debt is a lot less attractive than somebody with a healthy balance sheet and a steady income. Think about what that can do to your own financial position. Okay, now, okay, teach a class at M&A. We'll talk about a little bit more about me a little bit later. But America is nothing more than a 2-asset portfolio. Okay, the same thing is true with any projects you're going to be in here. How do you underwrite a potential investment? How are other people underwriting the investment you're pitching? Because financial statements are simply, Emperor has no close, you probably all read it, are simply the closing of a project or entity. How do you dress yourself? When you got up this morning, you look at that nice red shirt and say, this is how the world should see me. Same thing with financial statements. The reason I'm focusing on forward-looking statements, how do you want the world to see your project? How do you want the world to see you? You should all be doing your own personal financial statements and say, this is what I look like today, what do I look like in 5 years and 10 years, and how do I get there? When you go into a lender, when you go into a creditor, when you go to an investor, and you want OPM, other person's money, or capital, what are they going to say? Show me the financials. You need to be able to underwrite them better. When I work for a client, I've had many banks say, Roger, are you trying to do our underwriting for us? And the answer is, yes. Yes. Okay, most times when I send you documents, it'll be in a PDF format. Anytime I work for a client and I send a bank to a lender, what do? I send it in MS Word format. Why? Because bankers are lazy. Take my name off it, put the lenders on, boom, send it to committee. My client gets the result. Just tell me what you want, and I'm getting paid by the hour, which is fine. Create performance statements for ongoing concerns in current companies. You're going to want to do that for your own investments. You're going to want to do it for other people's investments. Be very, very cognizant again of what the investor is. Okay. You can look at project returns. Have you guys done any waterfall modeling, anything like that? Bifurcation, any CMO models, or anything like that? Okay, basically it's financial engineering or waterfall. You have the project returns, and then you can bifurcate returns however you want according to a JV agreement or some sort of, equity participation model. So you design the product that the investor wants. One of the first things I'll do when I talk to a new investor, what do you want? And they'll be like, well, tell me about the project. I go, I'm happy to tell you about the project, but why don't you tell me what you want? The whole time I'm thinking, how do I engineer these returns to provide what they want? Do they want low risk, low return? Do they want high risk, high return? Do they want a long duration asset? Do they want a short duration asset? I want all that information before I pitch the deal. Because I'll change the pitch accordingly. Or I might have two pitch books. Again, think about it. Insurance company and a bank. What are the main differences? Insurance company has long duration liabilities, the bank has short duration liabilities. They invest differently, they behave differently. You have to understand that. If you get the same terms from a bank and you get the same terms from an insurance company, and you're borrowing the money for real estate, who do you want to borrow from? Bank or insurance company? Bank. Why? A bank doesn't want the asset, an insurance company will. A bank will fight foreclosure, an insurance company will say, give me the keys. The behavior is completely different. Regulatorily, an insurance company can hold the asset, a bank cannot. That's why you will generally get 25 bips off from an insurance company, pension fund, or other similar type of lender than you would a bank. Because again, a bank doesn't want the asset. An insurance company, fine, we have a team, we'll take it. We have no problem managing it. Expected return with forward-looking ratios. We talked about that. You'll be able to create performance statements and analyze. I had originally wanted the final exam for this project to be a model. I was going to give you a pro forma. I was going to give you 4 hours. You were going to have to make the forward-looking statements. Okay? Apparently the school can't accommodate all of you in a single computer room, so we couldn't do that. But that's how adamant I am about you having skills. You need to be able to look at a spreadsheet and create your own statements. How many of you have built your own personal financial statements? Okay, not many. Okay? You should have them available. Teaching method, courses based on live lectures, discussion of homework problem projects, all reading must be done prior to class. If you don't do the reading, if anything happens, go. Okay, will you get more out of the class having done the reading? Yes. Okay, why are you here? You're here to make money, which means you need more knowledge than everyone else. And that means you need to read more, you need to work more, you need to have your skills getting sharper. Homework problems are to assist your efforts to learn material. I will also say the homework problems are very similar to what you'll find in the first quiz, which is 20% of your grade. They will not be reviewed in class unless a large majority of you have an issue. I have office hours, I'll come in early. I'll help people individually, but generally I like a large general overview discussion. Plus, I'll distribute the solutions. It is important that they all be understood. Grading policy, financial quiz, cases for total 10 points each, final project and final exam. Okay? How do I grade you? It's very, very simple. 25% get A's, 25 A minus, 25% B plus, 25% B. I reserve the right to go below B. If you don't do anything, that makes it easy. Okay? So, prisoner's dilemma, however, if you all collude and do nothing, I will randomly select 25% of you for aid.
No problem doing that. Okay, but the problem is one person's gonna break ranks and then you're all doing okay.
Student information, okay, when we come up, okay, at the break, I'm gonna put up a, MS Word. I'm gonna want you to give me your email or emails. I will distribute everything for this class via email. Syllabus, that you probably already have it, today's lectures, next week's lectures, memo for the projects, I will give you everything. Special write-ups, etc. Just give me your email address, hellokitty@yahoo.com, comma, space, and then save it. You can have as many emails as you want. I don't care where it goes, but I do want to be able to touch it. Schedule today, course requirements, we talked about the syllabus, we talked about the schedule, we talked about grading. We're going to talk about steps for analysis. I'm going to tell you what your final exam is, okay? I'll tell you right now what it is. You're going to have 4 case write-ups in a small regional bank called Orrstown. Your final exam is going to be 4 hours. It's going to be on a small regional bank. It's going to be very similar. You're going to have to do a comparative analysis. You're going to have to do pro forma statements on your laptop. I will even hand you the final exam the week before. The only thing you will not have is the name of the institution. You can build whatever spreadsheets you want, okay? You can prepare for this any way you want. I would highly recommend already building the sheets and being able to populate so that you can analyze, okay? But you will all have the same information. The only thing you won't have, and I won't take it until the day of the exam, is the name of the institution. Okay, I had some issues last year with some academic integrity issues, so fine, I'll give it all to you. Okay, there's no way there's no way anybody can, not have the integrity when I give it everyone everything. It's all graded on a curve. Financial statements and analysis, again, you need to know the 4 statements. We're going to talk about that ad nauseam. Balance sheet, income, cash flow, and retained earnings. You're going to want to know what each one does, and each one stands, and how it's used, and which is more accurate. Valuation, we're going to talk about different valuation techniques. How do you value a project? How do you value a corporation? Who determines the valuation method? You've probably learned multiple valuation methods. Who determines what is correct? You've learned IRR, MIR, DSCR, cash on cash, debt yield, all. Who determines what's correct?
The market price.
He who has the gold, the investor. Okay, that's what, one of the things I didn't realize when I first, went out into the world. I'm like, oh, you use IRR. No, you use what your boss tells you to use. Okay, which is true. We're the investor. Okay, and you need to understand the strengths and weaknesses, because the more money you make, the more value you have to add. Hey, maybe you're not looking at the strength. Maybe IRR isn't the best metric. Let's talk about this. Okay, because I don't think IRR is a very good metric. Okay, and MIR is only slightly better. How far are you into this program? So you're 35,000 into it. Fair? You're 35,000 pregnant, you're going to give birth in another 35 grand to an MSF degree? Okay? I mean, let's call it what it is. Your CF0 is going to be 75 grand, and you better have a positive return. What are the 3 rules of investing? Is that unreasonable? Have you had class in investments? Okay, so it's not unreasonable. What are the 3 rules of investing? No.
Positive NPV. NPV good.
You may have been saying it differently.
Basically, put in money, whatever you invested in the beginning, you have to have more than what you put in.
So the second goal is get your money back. Get your money back. Give your money to a relative. At the end of 1 year, what do you want? Just give me my friggin' money back. Third rule. Return on capital. What's the first rule of investing? And I'm gonna tell you, you're gonna chuckle, and in about 10 years, at least 2 or 3 of you will be like, holy crap, was he right? Stay in jail. Having had several of my friends be guests of the federal system, I can promise you that the number one goal of investing is stay in jail. Okay, then getting your money back. And what does everybody focus on? What do you generally focus on for your 35 grand? Making money. That's the tertiary goal. It is the least important. Okay, it is the least important. Getting your money back is, you could argue that is the most important, is staying in jail. And then return, which would be IRR. Now, we talked about risk and return. Is it fair to say that you all use the word risk at least once in daily parlance? No matter what you're doing, the risk of not getting home on time, risk of a spouse or a special someone being upset with you, blah, 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 okay? Is it fair to say you all know what risk is? 35,000 records. So that's fair. Okay, so expecting you all to know what risk is completely reasonable. What is your degree? What is your whole degree? Yeah, the S stands for science. What is the equation for risk? Write it down. You told me it wasn't unreasonable. You told me you understood it. You want to make a 6-figure or 7-figure job with bonus.
This is relevant.
Give me the equation.
Interest?
Square, sigma square.
Not sigma squared. I want an
Okay,
equation.
that's variance.
You have to have an equal.
There.
Give me the equation.
It's the sigma of the returns you got minus
Variance.
the sigma of the returns,
Sigma,
all the returns you got minus the mean of them. Squared divided by
Xi minus what?
x bar whole square. Divided,
by
x minus,
n minus 1 is
yeah,
but regardless of that, I use Excel.
To use Excel correctly, though, you have to know the equation. What equation do you use?
No. It's some of them, and then at the end you divide them.
yeah, so n minus 1 is out of the sigma.
Yeah, it's not included in the second.
Yeah, it doesn't matter. You have to develop the same thing.
Yeah. Sigma n will be n.
We're headed down a bad path. Okay, let me fix it. Okay. What is the equation you use in Excel to calculate NPV? NPV. The problem is the NPV function in Excel is wrong. Okay, it provides an erroneous result. It needs adjusting to be accurate. Okay, that's why you need to know the basic theory. Because you have to know what Excel does well, what Excel doesn't do well, and you have to understand the result. How do you earn a premium or a large salary? It's the 1% additional knowledge like this. This is for a sample. What you want is the generic variance equation. Okay? The sample variance equation that you gave me assumed that each instance had a probability of occurrence equal to what? 1 over n minus 1. So it had equivalent. This equation I call the scenario variance equation doesn't make that assumption. You have a special case where P of I equals 1 over little n minus 1. You could also talk about a population where P of I equals 1 over big N. Okay? But a sample, you'd be using X bar to estimate the central location. And for a population, you'd be using mu. You'd
using normal distribution for both, but now you're talking about returns, you're going to be careful.
Okay? Now, are we all in agreement?
But it's not necessarily.
This is just a quantification of risk. We're not talking about, distribution, shape, et cetera. We're just quantifying risk.
I wouldn't necessarily quantify risk, you really want to be technical, because technically, it's only those where where it varies under, you technically consider risk. But I don't care if it's volatile over the average, that's good for me, that shouldn't be considered risk. So,
It's a good discussion to have, okay? I haven't told you about my background, but I'm a former fund manager. Okay? Risk is deviation from expectation. All right? It's both sides. When I was in fund management, what happened when I had too little money? I could be insolvent in the worst case. Okay? What happened when I had too much money in fund management? Pardon me? No, just the opposite. I have a compression of yield because I'm sitting on a lot of non-deployed capital. My yield compresses. What does that do to my personal bonus? Sends it into the toilet. Okay? I always wanted the most efficient or optimal amount of capital. Not too much, not too little, just like the porridge and the bears. Okay? So deviation is on both sides of the need. You know, what did I want when I was in commodities? I wanted expectations. I always wanted to hit expectations. What used to anger me is when sales would come in over forecast. And the salespeople would come in, look, we outperformed, we're over forecast. And I would be angry as when they underperform. Why? Because if you consistently outperform, what happens when the market turns? That's right. They're like, Roger, you just want us to hit our numbers. Precisely. That's why we do budgeting and forecasting. I don't like deviation. Never did. Okay? Now, can we all agree that this is the equation, or a equation, for risk? Now, this is only risk for a project. It assumes you're investing in isolation. You need to know the equation for portfolio risk. What is the equation for portfolio risk? You love that data.
Correlation.
Love that data.
It will be correlation between the different assets that are there plus.
Tell me the equation.
So sigma of RI minus.
What is it?
So sigma xi. Sigma x1 square plus sigma x2. Say there are three portfolios. So sigma x1 square plus sigma x2 square plus correlation.
Xi, Xj.
Xi, Xj. Sigma
Covariance
X1.
by J. I don't care what. That's why if multiple people talk about that, we'll get lost. I'm just telling you why I get all confused. That's why I can't dot or multiple or double. So this is portfolio variance or portfolio risk, where you have multiple assets within a portfolio. How do you value? You guys have all had a portfolio class, correct? How do you value within a portfolio? It's always the marginal contribution or the marginal change to the overall portfolio. Does the efficiency go up? Does it go down? Does the expected return go up, go down? Does deviation go up, go down with the asset included or excluded? So I just want to make you aware, because we're talking about risk and return. You're $35,000 pregnant. I asked everybody what risk was. Everybody nodded and was struggled. And I want you to get the job. Okay. Financial statements, you're going to want a strategic perspective. One of the things I'll ask clients is, what is it you want? If you're looking to divest or you're looking to purchase, what exactly is it that you want? To find the box, we'll go find investments that will help you fill the box. Operating versus financial assets and liabilities. Think about it. You have systematic and you have unsystematic risk from a portfolio perspective. How do you eliminate unsystematic risk? Diversification of long assets. How do you eliminate unsystematic risk? You can. Absolutely you can. It's called the negative beta. Okay, you can financially engineer the reduction of systemic or market risk. Okay, that's what I'm talking about with operations versus financial. Okay? You can physically diversify away unsystematic risk, leaving you with an ETF, and then how do you diversify the risk for an ETF? You need a negative beta, you need a negative reward weighted asset. But you absolutely can diversify all the way down to the risk-free asset, whatever that is. Chapter 4, profitability analysis, that'll be next week. One of the things we're going to talk about is what is profitability? How do you define profitability? My Malaysian clients are looking for 20 to 28% returns. What do I personally look for in my company? 4 to 8. Okay, why? What is my greatest concern? Losing money. If I don't make any money and keep up with inflation, I'm fine. Do I invest a lot differently than I did 10 years ago? You better believe it. How did I invest when I was with the fund? Whose money was I investing? Somebody else's. Okay, so I was swinging for the fences every day. I punt every day now. I just want to get on base. Get on base, get on base. Very, very simple concept. Common size percentage changes and financial ratios interpretation. We're going to talk about many financial ratios. We're going to talk about what they mean. We're going to talk about what they don't mean. We're also going to talk about different methods and metrics for valuation. One of my favorite metrics is called probability of loss. Think about it. When you analyze companies, when you analyze your investments, you all talk about IRR versus a benchmark. How many times have you talked about the probability of getting your money back? Okay? We'll go through how to analyze and quantify that for corporate using the financial statements. Okay? Because isn't that really what you want to know? You want to know the probability of getting your money back. Okay? In my opinion, the most important metric. Financial statement analysis of risk. First thing we have to do is we have to quantify, which I gave you. Short-term liquidity and long-term solvency. We'll talk about that. Generally, short-term is going to be 1 period, generally 1 year. Long-term, I generally consider 5 years or greater. We'll talk about debt types and debt flavors. Remember that debt does not equal debt does not equal debt. What are the 2 most prevalent floating rates that people pay their debt to? LIBOR and prime. Fair enough. You guys have talked about LIBOR before, correct? You all know what LIBOR is. How many banks? It's 16. Okay, so they do a trimmed name. When is it published? Daily. What time? I mean, it's 8 o'clock somewhere. Okay, what when? 1100 Greenwich Mean Time. How many LIBORs are there? Give me a number. You want the job. How many? No. Something like, you guys want what, 150K to start? Is it unreasonable for me to ask you or expect you to know how many LIBORs there are? No. More than what? They're a factor of 10 off. That's a big deal. There's 150. 10 currencies and 15 maturities. How many of the banks are U.S. based? 3. Bank of America, J.P. Morgan, Citi. Okay, what's the largest U.S. bank by assets? Well, not included, which I find ironic. But they only became the largest with the acquisition of Okay. Credit risk. Basically, what is credit risk? This is one of my issues. Banks generally quantify default risk. What do I think they should be quantifying? Recovery risk. If somebody defaults and you get 100% of your principal back, that's just a yield compression. If somebody defaults and you don't get 100% of your principal back, now you've got a problem. Okay, it's a big difference. So I think banks are focused on the wrong metrics. And then bankers. Forecasting and pro forma statements. We'll talk about how to build a pro forma, and again, I will be sending you a webinar. It takes about 8 hours. I host it. Okay, that will actually build a model for you. It is imperative to me that you can take a blank spreadsheet, build a model, and build financial statements as part of that model. You will have that skill. So when an employer says, why should they hire you? You're going to say, because I can do something. I have skills. They're like, well, I want a smart person. Well, then you go hire a PhD. Okay, and again, I'm not derogatory. I do want a PhD eventually in my career. But my point is, you're here to make money. You're here because you have skills. Okay, Revere Street case study and pro forma development. We'll talk about that. The financial quiz is about 2 hours. It's not about 2, but it's 2 hours. Forecasting and statements. We'll talk about the 7 steps. We'll talk about risk-adjusted returns and how to quantify them from financial statements. Final exam is in class. You have 4 hours. I will give you the final exam the week before. The only thing I won't give you is the name of the target entity. That's it. Okay, so I don't know how I can have any academic indiscretion. I don't know. I give you everything. And then the final project, which, by the way, is individual. Your 4 cases can be done in groups of up to 4. Your final project has to be individual, and you'll need to give it to me on a thumb drive. Okay, if you want the thumb drive back, you have to give me a self-addressed stamped envelope.
After the final, we fill out the statements that's going to be given to us, so we should have.
What are the statements are I do? I will give you historic statements. I'll give you the 10K, I'll give you the annual report. Okay, you should already have statements preloaded so that you can load in your data and you can do the analysis. Right. That's the word I
Final
was
exam
saying.
will have, we have to make projections in the morning, final exam,
Yes.
on statements.
Absolutely.
So that will be given to us before we make it before.
You'll have the structure that you'll be building with Forstown throughout the semester. You're already doing all 4 cases on a small regional bank.
Right.
Okay.
So we're just going to have like just like earnings calls just to make assumptions about the growth.
You have to document the assumptions in the write-up. You have 4 hours to. But if you think about it, this is the one thing that I don't think, I'm trying to learn from when I sat in your chair. Okay, at work, you don't have 2 weeks of all-nighters. You've got 4 hours. Your boss comes in to you at 8 and says, I need a decision by noon because committee's at 1 and I'm going to lunch. Okay, that's what happens. Okay, you don't get a chance to go work overnight. Or you get an email at 2 a.m., I need this on my desk by 9, which is completely unreasonable, but you're also making, what many would consider an unreasonable salary, which makes it a reasonable request. At the end of the syllabus, which I believe all of you have, I will tell you the name of everything I give you. Again, I try and spoon feed you as much as possible because I want you to succeed. So I give you all the lectures, all the lecture names. I will email them all out tomorrow afternoon, probably. Okay, tomorrow afternoon. Not all of it. I'll give you the slides for today, the slides for next week, and each week. You'll be getting at least 1 email from me a day. Okay, because you'll get the daily capital market summary. Are there any questions on the class? That's a very question. Do you actually get exams that are multiple choice? In this program? Okay, you're not getting it this far. Okay, because I've never had a boss come to me with a multiple choice. Okay, that is never occurred. Okay, so no. Okay, I give you, again, skills. Ideally, what I would like is you to save your final exam on your hard drive. You give it to me on a thumb drive with your Revere Street model. This way you can go to a future employer. This is what I've done in 4 hours. And by the way, I earned an A in this class or what have you. So again, I'm hiring right now a graphic artist to redo a logo for one of our businesses. What do? I say, show me your portfolio. I flip through all the pages. You guys are finance, you should have the same thing. You should be able to flip through different models and different work products that you've done and be like, whoa, whoa, hey, this person produces. Okay? So that's what I'm trying to do. I'm sorry you got multiple. I am sorry about that. You're not gonna find a greater fan of this program for the thing. Okay? And let me tell you, when I was in this program, I was miserable. Okay, you can ask the woman I lived with, she will tell you I was clinically depressed. Okay, she will tell you I was like 2 hours of sleep. It was horrible. I hated it. I love it now, but I hate it. Okay, that was back in 99, 2000. Question?
Just concerned about the accuracy of numbers and like the time.
I don't hear well. I'm sorry.
Like the accuracy of numbers, like when we done, I mean, I have the time to review everything.
You have 4 hours. Talking about the final exam?
I mean, it's going to be my first time ever to.
God bless you. God bless you. You have 4 hours.
You mentioned something about quotation that we're going to be working on.
Really one. It's really one analysis that's expanded each of the 4. It's Worstown Bank. And I will send you out tomorrow afternoon a memo write-up of everything I was saying. Okay. I will tell you right now, I grade very lightly on the first 2. I grade a lot harder with a sharpened pencil, grade 4. Yes, exactly. And I care about formatting. Okay? Now I said people, oh, you can't believe it. Did you look at my numbers? Yes, I looked at your numbers, but you gave me something that looks like crap, and the grade reflects that. Okay? You know, it's a local valuation. MAI would be something U.S. based. Royal Institute of Chartered Surveyors. It's a valuation. There's MRICS and there's CAP. That is a the elite definition. But I'm really a real estate guy. I love real estate. We'll talk about real estate. I love real estate in many ways. Let's talk about that for a moment. You just touched my heart. Okay? The 3 main asset classes are what? Well, real estate also cheap. We'll talk about why that is right now. What are the 3 main asset classes? You have equity, you have fixed income, you have real estate. Okay, you buy equity. What is your maximum loss? 100%. You buy fixed income, what is your maximum loss? 100%. You buy real estate, what is your maximum loss? Infinity. Infinity. Okay, what do I do when somebody walks on my land? I walk out with a gun. Okay, what have they done? They just enter my land, providing me with a liability. What if they get hurt? Okay. I don't do that in the city. Okay, I do that when I'm outside of the city. Okay. So again, it's perfectly legal. But think about it. You buy $1 million home. You put $200,000. Poof, by wave of a wand, the home is gone. Do you still owe the lender $800,000? Yes. Now, poof, the home is gone, and the soils are toxic. You have to remediate it. Yes. Why do I walk out when I'm in southern Maryland with a gun when somebody's on my land with a truck? What if they're pouring chemicals into the land? Who has to remediate that? Me. Okay? Me. And that, I can't even think of the expense of that. Okay, am I insured? Absolutely. There's only so much insurance you can get. Okay? That's one of the things. Okay? The other issue. Okay, you buy an equity, what do you get? Yeah, whatever. What do you get quarterly? Hopefully. Okay? You buy a fixed income, what do you get semi-annually? A coupon. You buy real estate, what do you get monthly? A bill. Okay, and what do you get annually? A big bill. Okay? You have to lease the land. Okay, I've got over 100 acres of agriculture. That's a bill. Okay, that's a bill. And then you have things like right-of-way issues with neighbors and things like that. You know, I had a woman come up to me 2 weeks ago because I'm making her build her own driveway through her land. I'm a single mother, blah, blah, blah. Fine, you buy the land. My land, my rules. I'm sorry to be so harsh. What are you going to do it? No. Okay. You could have bought the land I have, by the way. Nobody prevented you. You know, I didn't earn all this money and work this hard so that I could supplement your lifestyle. Okay, does that mean, the state's capital, donate money on a quarterly basis? You're doing the right thing. All right, any questions on the syllabus? Anything you want to know? I promise you skills in this class. She still loves you, and she's gonna love you more with more money. Okay. Are there any questions on the syllabus? Okay, my name, a little bit about me. Academically, I have a BS electrical engineering with minors in statistics and economics. I have an MBA in investment. I have an MS in finance. I have an MA in international transactions. I studied in Moscow, Prague, University of Economics, and in Mexico. I held faculty positions here, Hopkins, and Georgetown. Okay? My first book is due to Routledge on Tuesday. It's Real Estate Pro Forma Modeling, hence I'm giving you the chapter on financial statement development. Okay. My second book is already under contract with Oxford on asset reposition. That's academically. Professionally, I've held senior positions at, anybody heard of Constellation Energy? I'm the former managing director of the retail commodity division. Okay. CFO of America's Best Builder, senior portfolio manager of a fund. I was in charge of Chicago to Hawaii. My company was started in 2009. So, I don't really work, I just do what I want to do. Okay. And what's better than making money? Ethically, but that goes without saying. Making money, yeah. Any questions?
Big question.
I don't speak Russian, but I was just in Russia 2 months ago. I was actually arrested in Russia 2 months ago because I tried entering on a invalid visa. So I was actually going from Mongolia to, yes. Well, oh, you want to know about Russia? Okay, so this is what I care about Russia. So they go to arrest me, okay, and they have to fingerprint me, and it's all electronic. Well, for whatever reason, my hand doesn't fingerprint. So what does the soldier do? Fingerprints himself. Lord help me if he does something illegal in Russia, because it's going to be my face on CNN. Okay, this is a true story. I took the Trans-Mongolian from Beijing to Ulaanbaatar, and then I took the Trans-Siberian from Ulaanbaatar to St. Petersburg, and then everyone. I liked it. There were more tower cranes in Ulaanbaatar than I saw in Dubai in 2008, but none were moving. None were moving. I like lamb, so I thought they had good food. Where'd you say you've been? I was at basically a Western hotel. Typically, when I'm on long-term travel, I eat in the hotel. I don't get that. Okay, and then in October I go to the Louvre because I wouldn't think I was in the Hermitage, and I want to compare the two. Okay, any other questions? Yep.
No other certificates like CFAs, CPAs? No.
Say something, I'm sorry, what?
I mean, I don't see any like CFAs, CPAs.
I think a CFA is redundant if you have this program. Did I say CFA or CPA? CFA, I think the CFA is redundant, okay? I will also tell you, if I were your age, what are you guys, 28-ish? Okay, if I were your age, I would recommend you get the CFA, okay? Because it is a globally recognized credential, and you've had such a proliferation of shitty universities, okay, that you need some sort of global standard to ensure you can do the problems, okay? I'm old enough now that doesn't really get me. Okay, and a CPA, to get a CPA right now, I need a master's in accounting. I'm getting a little long in the tooth to sit in class. And I know it. There's better uses of it. Does that answer your question? But for all of you, I would recommend a CFA because, you know, a good question is, hey, if GW is a good program, why didn't you just get the CFA? Okay, it's really not just a bunch of problems. 1 level, 2 level, 3 level. The other issue is once you've earned it, you don't have to carry it on your resume. If you think you have too many credentials, you just take it off. So I would recommend it for you. Okay, but for me, again, I'm a little long. Any other questions? Again, skill sets, as many as you can. Credentials, as many as you can have, especially when you're young. Again, you don't have to put them on your resume. If you get too many credentials, you just carry what you want. Okay? Like I gave you a long list of academic credentials I have. They're not all on my resume. They're on my academic resume, but they're not on my resume because who cares? Now, it's interesting because I have two different resumes. If I'm working in Asia Pacific, I have a longer resume which is focused on academia. If I'm working in the West, North, South America, or Western Europe, it's a much shorter resume where I stress a lot less academic accomplishment. So it depends on the culture as well, and where I am on the globe. Any other questions?
What do you do over in Asia?
Financial modeling, I'll do some asset repositioning. One of the issues in Asia Pacific is you have a lot of nouveau riche, because you really only had privatization in real estate since the mid to late 90s, especially if you look at China. Okay, now you have $1 billion portfolio, what do you do with it? I'll help them out. Okay, I'm not a buy-sell guy, I make money. How do I make money? When I pick up my pen, I make money. When I put my pen down, I stop. Okay, I do not make commissions or bonuses.
Feel real life when people do evaluations, financial models, and all that stuff. That felt pretty much the key. Was there any other program suggesting for that?
Yeah.
HBC program myself.
This is the number one. Okay, the first thing I do when I look at a new deal to underwrite it, I grab my 12C. And on a very broad-based, 30,000-foot level, does it make sense? Okay, then I sharpen my pencil and I go to a thing. And, okay, let's assume somebody's hired me to do their modeling. Okay, or hired, one of our analysts to do the modeling. Okay, what do I do before we send the final model? I take out my 12C and I check the entire model in Excel. I mean, the model's in Excel, I check it. So this I would take. Okay, if I don't have it, I still make it.
You can do the same function on your own, right?
You're how old? I love it. Yes, okay, your head is full of dreams. Okay, your head is full of dreams, okay? When you're in investment committee and when you're in trust committee, you don't have time to open up your computer, to do the tablet, what do? You grab your calculator, boom, what's your answer? Okay, exactly. Okay, it's not realistic to put everything into a model. You need to have an understanding that you can simplify. Because how are major investments made? Probably on a simplified basis. But you need all that backup. So that would be the number one. That's why I'm so adamant about it. Okay? At least have the skill. You don't have to use the skill. It goes back to the CFA and CPA. The other issue is, what would I say? Okay? Let's talk about careers. If you're risk averse, you get a CPA. If you want to maximize profit, you get a CFA. Okay? If you want both, get both. That's less.
Have you ever thought about FRM?
Again, I'm getting long in the tooth.
But is that a little bit kind of both? It's both risk and financial?
Again, I'm a little older, I'm long in the tooth. I'm pretty much done. Okay, I'm tired. I'm not really, but I don't need anything there.
Well, when you do that test, it just be
Or not stop. Again, my young friend here at 24, I say don't stop until you're 30, 32. Okay?
I'm gonna talk about that same island that you have.
I don't have an island, okay? But the other issue to think about is, I got employees, okay? I got a lot of hassle. So, I mean, again, it all sounds great, but, I spend 12 to 20 hours a week just managing my own shit. Okay? Because I don't have enough money to hire, to outsource everything. Okay, that I don't have. Plus I'm cheap. But the point is, where did I sit? I sat the whole point of my love of this program in Javor is I sat where you were 14 years ago. I had a 96 Accord in the year 2000. That was it. Okay, maybe I had 15 to 20 in the bank. Maybe. I don't remember. Okay? In 7 years, I could not work. In 14 years, I'm here. So you're not going to find a greater, and it's from knowledge. Financial statement overview. All right, now I'm just gonna give you a broad basic, okay? Provide an accounting picture of the firm's operation. Again, think about it. The financial statements are basically the clothing you put around an entity, a corporation, or yourself. All right, when you go in for a personal loan, what do they ask you for? If it's a small loan, they're going to ask you to complete the personal financial statement, which is a income with verification and a balance sheet. Okay, that's you personally.
We take a quick break? No? I'm seeing both.
What is the one nation that is the hardest for me to lecture? I love China. Especially India, because this means yes. And it is the hardest thing in the world because I didn't realize how much I use for body movement until, do you get this? And about the fifth time people get mad at me. We said yes. Sorry, I didn't comprehend, because they say yes with the head bob, and Provide a common template with standard rules for demonstrating operational and financial performance. Again, you need a common template. You need to be able to compare A versus B versus C. I like the common template to be expected return, risk, and then you want to look at the marginal change to your overall portfolio efficiency. So you look at it in isolation or as an asset collector, then you look at it as a portfolio manager. Okay, you need to do both. You need to look at everything as a portfolio and the individual asset. When I was at the fund, I didn't get along with the chief investment officer. One of the reasons why, because he said he was managing a portfolio. I said he was nothing more than an asset selector, because we would only talk about assets in isolation. We never talked about the portfolio combination. Okay, the head of trust, Bud Palenkia pulled me in, head of $40 billion. Roger, you get so upset in investment committee. If we're maximizing the return of every project, are we not maximizing the return of the portfolio? That is a direct quote. And my direct quote back to him was, that's the stupidest thing I've ever heard. It was a true statement, but it was a stupid statement because it eliminated the benefits of portfolio diversification. And the goal isn't to maximize return, the goal is ultimately to maximize efficiency or maximize return without ignoring risk. Financial statements and decisions, what do you want to do? You want to assign a credit rating, or you want to extend credit. Okay, if I'm investing in a deal, okay, I'm essentially extending credit, whether it be on the equity side or whether it be on the debt side. Okay, another personal issue is most of your classes are focused on equity investment. Is that correct? I know it's correct. What is the smallest asset class? It's equity. What is the hardest asset class to make any money in? It's equity. I think you need to spend more time on fixed income and real estate. Okay? Because you can still earn monopolistic gains in real estate. Plus, you can trade on insider information legally in real estate. Okay? Real estate is fraught with asymmetric information. Equities, you go to jail. Okay? Just a quick discussion. Assessing operating performance and financial health to stakeholders. Who are the stakeholders when you're looking at the statement? Employees, suppliers, creditors, customers, managers, owners. Could be anybody. If you're working for a company, you should be underwriting the company yourself. Why? Because you want to know certainty of employment continuation. You also want to know when you get your bonus, was it reasonable? Did they screw you? Okay? And again, when it comes to working for somebody else, who controls your annual salary? Who controls your hourly salary? You. If you're unhappy, give yourself a raise. Work less and study more. Don't forget that. Strategic consulting, that's one of the things I always tell, I always tell clients, be quick to fire because somebody unhappy is going to give themselves a raise. They're going to get it. They're either going to get it in terms of annual salary or hourly. But the person is always going to get it. So be quick to fire. Evaluating firm for a M&A, merger and acquisition. What is the value? What are the synergies? How is most value created in an M&A transaction? It's through the elimination of costs. What are the two largest costs for any corporation? Employees and real estate. So it's elimination of real estate, could be leases, could be hard assets, or the elimination of employees. And just because you are on the quote-unquote winning team does not mean your job is secure, because you still have to integrate. Valuing a firm IPO, valuation for damages for litigation. I've done a little bit of that. I happen to love litigation. Why? Because most things settle, and I'm getting paid $600 to sit on a bench. Read the paper. Okay, and then people come out, oh, I'm sorry to make you wait. Are you freaking kidding me? I have nothing better to do. Okay? Because the clock is ticking. Sources of financial statement, annual report. I recommend reading it cover to cover. I recommend spending a considerable time in the annual report on the chairman's letter to shareholder. Read the last 4 years. Did he or she do what they said they were going to do? If they didn't, that's fine. Did they explain it in the next year's letter why they changed strategy? If they didn't, perhaps they're short. I've lost things. 10K, 10Q, you can get all this from freeedgar.gov. You can get it from corporate websites. You can get it from Yahoo Finance and other Bloomberg. Okay, all the information's out there. When I sat in your chair, it was very difficult to get the information. You guys have plenty of information. 8K, bankruptcy, basically a special event, proxy and special event. Why do you want to analyze? You want to look at profitability, but again, you also want to look at the probability of getting your money back or the probability of solvency or insolvency. So what is important to you? Financial condition, financial health. You may want to look at short-term runs, you may want to look at long-term runs. You also want to look at the financial health relative to an index of the overall market. So you have to determine or you have to identify your peer class. For the final exam, you're going to have to pick a small regional bank and use that as a peer comparison for your final exam. Okay, now the problem is I'm not telling you what you're doing. So you may choose, a small regional bank that you wouldn't otherwise choose because they have dissimilar areas. So you have to make assumptions in your write-up and move forward. I will understand that. Okay. And then capitalization structure. What does that mean? What is capitalization structure? It's the amount of debt, the amount of equity in your capital stack. Okay, teach a class in wealth management. Your personal portfolio or your personal capital stack, no debt in your investment portfolio, highly lever yourself depending on your risk profile. Also remember, equity does not equal equity, debt does not equal debt. And then who are the audience? I talked about the stakeholders earlier. Financial statement analysis, you need to look at 3 tiers, okay? You need to look at the macro and the micro. For your 4 cases, I'm having you analyze Orrstown Bank, which is a small regional bank in Pennsylvania. What do I recommend you do?
Stay as a whole first.
Go visit them. Drive up and visit them. Go in, talk to them about their rates on CDs. Talk to them about potentially getting a loan. Go up and talk about where they make loans. Are they nice? Are they rude? Is it clean? Do you want to invest? And the other issue that I am adamant about is I don't give bullshit work. Okay? Is it fair to say you've had a lot of bullshit work in your academic career? Yes, I already know the answer to that. Okay? You need to look at Orrstown as an absolute trade for yourself. Because at the end of the day, if you're bullish on them, you should long them. If you're bearish on them, you should short them. It's a public entity, you can do both. If you believe there's going to be no movement, do a reverse straddle. But look at everything you do in this program on how do I capitalize on my efforts to make money. That's why I'm using Orrstown, which is a public entity, so you can trade. Okay? Otherwise, at the end of this, you're going to spend a whole bunch of hours on this BS small regional bank, and you're going to be scratching your head, I just wasted, whatever, 7 weeks of your tuition is. It's not my intention. Trade, trade, trade. Put your money where your belief is. It's not enough to just tell me, recommendation, buy. I want to know that you bought. Okay, I'm not forcing you to spend your money, but I want you to start thinking about that way. Financial statements. Okay, one of the issues about financial statements and one of the major differences between accountants and finance professionals is accountants look backwards, financial professionals look forward. We're going to be analyzing the statements in terms of, think about your You have a project due in the last class and you have a final exam. The project is 10 years forward looking. The exam is 3 years or 4 years back with pro forma statements going forward. So I want you to be able to do both. Look back, quantify historic performance, and then accurately use that to estimate or as a predictor of future benefits. How do you make money? Again, in finance, one of the things about finance is only requires that you be consistent. It doesn't require that you be right. If you're consistently right, long. If you're consistently wrong, short. Okay, I am much better about picking losers than winners. I'll tell you that right now. Okay, when I underwrite, I am much more accurate at picking the loser. Winners, I still haven't, I'm still single. I still haven't figured that out. It's meant to be, here, sad, but true. Financial statements, cash basis and accrual basis. Okay, my company, 4 employees, we're all cash. When do I record cash? When it's received and the check clears. Larger companies, it's all accrual because they're trying to match their revenues with their expenses. The problem is you can have positive earnings and negative cash and you can be bankrupt. I remember being CFO in home building. I remember everybody giddy on certain days and I'm thinking, I have no idea how I'm going to make payroll. Okay, and I remember one day having to go to the owner saying, if you don't cut me a check out of your personal account, you are not making payroll. Four basic statements, okay, not an unreasonable question for an interview. Balance sheet, income, cash flow, and retained earnings. What does each one tell you? What are the strengths, weaknesses? What is the most important? A balance sheet implies something balances. What balances? Okay, perfectly reasonable question. Okay, when I interview for clients, that's one of the questions I will ask. Okay, I don't ask you to tell me the Black-Scholes equation. I ask you to give me, especially you at 24, because I read your resume and you can guess, age discrimination. I'm not discriminating because of age, but a young person better know the equation. Okay, an older person, I'm going to give you some leeway. Okay? Because you also don't have the background or the experience, I'm going to want you to make up for that with sharp knowledge. Balance sheet, assets and liabilities, the relationship must hold. And that's one of the things you have to do on the CFA, I believe, level 1, because I've looked at the exams for past students. They'll actually give you balance sheets for different industries and how do you map the industry to the balance sheet. Because they'll want you to understand the different capital structures and the risk profiles associated with each. Have you taken level 1 or anything?
No.
Never? How old are you? You're getting a little long. All right, you're getting a little long. I was 29 when I sat in this class. Holy, that was my third master. Almost killed me. So you look like you slept, so you're not working hard. And I would even say that I was just on the cusp of, we barely had laptops. Our laptops were about the weight of a desktop. So we did not see laptops prevalent in the classroom. Now you have your tablets and all that. Assets, economic resources, ability or potential to provide future benefits to firm. Okay? Listed in order of liquidity. What is the first asset on a balance sheet? Cash. What is cash? Cash does not equal cash, does not equal cash. Depends what currency. Is it renminbi? Is it yen? Is it euro? Is it Eastern Caribbean dollars?
This is the currency which the company's tax flows are back.
But you're going to have multiple accounts in different countries, which all get consolidated. Okay? And you're going to do the best to consolidate it in the home currency. But you still have currency risk and you still have geographic risk. Okay, you also have different earnings rates. U.S. dollars held in my U.S. accounts earn nothing. At the Bank of Nevis, I make 3% per year. I have insurance in the U.S. I have no insurance in the Eastern Caribbean, but I do have a natural hedge because I have an operating business. But if the bank goes under, I lose it all. Okay, so I'm constantly thinking about how much risk. Is that indicator on the balance sheet? No.
there are some effects, that but some effects, of foreign exchange, sort of transactions that are included in the notes to the balance sheet.
They can, that's why you always have to read the notes and the footnotes to the balance sheet, but you're still not gonna get a true, like, if you just looked at mine, I'm not handing out my sheets, but if you just looked at mine, you would never see just the risk associated with my cash. Okay? And I'm greedy, so I do like to keep a lot of money at the Bank of Nevis, okay? The other issue is, and I'll tell you right now, okay, if anything ever happened to me, I'm a flight risk. And I don't do anything but stay in jail. That's all. So if I don't show up, no, I don't do anything, I really don't do anything right. Listed in order of liquidity and then recognition, I just went through an IRS audit, settled it. By the way, does anybody know what happens when the IRS audits you? Okay, you literally get a phone call, I'm Jane Doe, Special Agent, badge number XYZ PD2. And what is the first thing you do when somebody introduces themselves with a badge number?
Correct.
No. Pardon me? No, better than that, I am represented. Okay, the conversation immediately ends. We settled, which I was very happy with the settlement. Rarely do people say that. And then my attorney's like, you're gonna tell me everything, right? I'm like, yeah, right. Chance. All right, asset classes. Okay, you have current investments, plant, property, and equipment. Again, what do you have? You have a full 15-week class in real estate, or is it 8? When I was here, it was 8. No, but you have one, right?
Yeah.
With Gertz? Tom Gertz? I worked with Tom Gertz. Okay. Is it 8 weeks or 15 weeks? When I had it, it was 8. So it's 16. Okay, good. At least you're getting a full class. Because again, what is the largest asset going to be on most of your balance sheets? Real estate. What is the largest assets for corporations? Real estate. The movie Pretty Woman was all about real estate. Okay, think about it. Richard Gere was a venture capitalist, determining that the breakup value, because of the real estate valuation, was greater than the whole. Okay? With a bunch of pretty people in the middle. Okay? Asset valuation, do you want acquisition or historical cost? Again, what is the most massaged sheet? It's the balance sheet. Because you can list your accounting statements or your account balances in multiple ways. You just have to be consistent over time. Is it replacement value, current net realizable value in terms of the sale, or present value? And if it's present value, what do you choose for a discount rate? Okay, I am not a fan, even though the number one valuation method in finance is present value or net present value. I don't believe that as a valid valuation method. Okay, just so you know. Why? Because you're applying the same discount rate to every period of cash flow. Okay, I'm a fan of Pomodoro. Okay, I'm more of a certainly equivalent wealth person than I am an NPV. I would prefer certainty equivalent of wealth, which came from FAMA. Basically, what FAMA did, have you not gone over this in financial theory? Yeah, FAMA basically used the discount rate of 1 plus RF to the T plus S. The problem with that is he's violating what interest rate theory? Segmentation, because he's assuming that short, medium, and long-term move together. But what he is doing is adjusting the yield curve with a constant spread. I already told you the denominator. Plus the numerator is your cash flow times the phi of t. So he's adjusting each cash flow with an individual risk function. You guys have not gone, have you gone over that CEW? Have you had a financial theory class yet? So you're having it. Pay attention to that. Okay, pay attention. Because it's CEW, but I actually apply that to my own investments.
It's more refined.
It's a bastardized way of saying it, but yes. And I don't mean that to be negative, it came out harsh. That wasn't my intention. Asset titles, you have cash all the way down to goodwill. What the heck is goodwill? Goodwill is when you overpay. Okay, and accounting lets you put a nice name on it called goodwill, but it's really an overpayment. That's a classification for overpayment. balance sheet liabilities, creditors' claims to assets, funding from creditors. All right, current, long-term, and other long-term. What I want to focus on right now is notice that a liability is advanced from customers and advanced from tenants. So if you're looking for credit enhancement from a negative credit, and you're saying, hey, give me a prepay, you're not really getting anything. Okay, because you can't use the liquidity, you're accounting for it as a liability on your balance sheet. If the negative credit goes into bankruptcy, it's an asset on the bankrupt company's books. The bankruptcy judge can pull it back. So I tend to like third-party guarantees, like letters of credit, or some other form of credit enhancement. Okay, I am not a fan of prepays. Okay, to be perfect. When I was at Constellation, what is the best way to collect on a bad credit? So, show up. You need to show up on their lobby, you need to show up on their staff. Okay, you're not going to get anything through emails, through attorneys, you show up. Okay, I still remember I sent a, one of our I was a different person back then. I'd like to believe I'm more empathetic today. Back then it was all about the balance sheet and my bonus. But I remember I had one female salesperson that had a lot of bad credits, and I finally had enough, and said, your job is to sit in their lobby, and I'm not signing any more contracts, or you're fired. I happen to know that her husband was laid off, and they needed the money. So I said, you will sit in their lobby, or you will be fired. Okay, so I get a call around 10 o'clock from her in tears. They're going to kick me out. And if they can, I said, then you're fired. Well, what do I do? They're going to call the cops. I said, tell them to call the cops. I'm on my way because they're thieves. We'll have a discussion with the cops. I'll tell them how much they owe us. I had a second call on my cell phone before I made it to my car. They're cutting us a check right now. Okay, show up. Now, again, I didn't say do anything in the lobby, but just sit there. Okay, just sit there. They don't want somebody sitting there, okay? You don't want that. Just show up. Balance sheet, shareholder equity, owner's claim, owner's have residual. Contributed capital reflects funds invested, and then retained earnings are basically earnings that are not distributed to shareholders. There was an article in the last week in the Financial Times which basically stated how did companies distribute their wealth to shareholders. They used to do it through dividends. How do they do it today? Share buyback. So there's been a fundamental change in shareholders' equity, different types of stock. Make sure you understand your voting rights. Make sure you understand whether or not you're Class A, B, or C. Make sure before you make any investment that you actually read the prospectus cover to cover. Now, I also want to warn you about something, okay? If you haven't figured it out, I'm going to tell you. You are going to be better educated than 99% of the wealth advisors out there. So trust in yourself. A wealth advisor is nothing more than a salesperson. Okay? Certified financial planner, certified wealth manager, certified CF, certified financial, I think it's a planner, CFP. Certified financial, I should know this, but she's classical planner. Certified financial planner, pre-2007. What was their educational requirement? No, none. Post-2007, today, what is it? It's an undergraduate degree from an accredited university. Could be in basket weaving. Okay? Could be in basket weaving. So be very, very cognizant. This is another reason why you, again, I talk about, look, you can hire experts. Well, then you have to define an expert. If somebody goes to cut into your chest, don't you want a surgeon from GW, Georgetown, or Hopkins? Yeah. So why would you go and ask financial advice from an English major? We'll do it all the time. Nothing wrong with English majors if you care about the shop and whale. Okay? But if you're looking for solid financial advice, go to an MSF from a GW or similar, highbrow program. One of my issues with society. Everybody considers, it's the same thing with real estate. There are two asset classes that everybody considers themselves an expert in, okay, in real estate. Hotels and residential. Why? Because people go on holiday and they stay in hotels. That makes them a hotel expert. Okay, and then they go home and they sleep in a house. That makes them a residential expert. All right, it doesn't work that way. They are probably the most complicated asset classes within real estate. Hotels, because what is the duration of a lease? 1 day, which makes it very difficult. Plus, the majority of their income doesn't actually come from development of the real estate, but ongoing business concerns in the real estate. Single-family residential, one of the reasons there is because valuations don't follow cash flow. They generally follow comparables, which are emotional. When I teach real estate finance, I have the students value townhomes in Georgetown. And I always get, so it's funny, I can always tell who started the night before because I get panicked emails. The asking price is $1 million, but I'm only coming up with a $700,000 valuation. What am I doing wrong? Well, maybe you're doing everything right. Okay? And that $800,000 is goodwill or unsubstantiated by rental incomes. Balance sheet, you have a dual effect if assets, between assets and liabilities. If assets go down, your liabilities and shareholder equity. So again, it always has to balance. Income statement, okay, now you have 4 statements. Let's talk about that. Balance sheet, income, statement of cash flow, retained earnings. The balance sheet is a periodic statement. It is a point in time. It is a snapshot. The other 3, income, cash flow, retained earnings, are periodic. They measure flow of funds across time. Okay, the other issue that people don't seem to get is that all these statements interrelate. You can translate balance sheet 1 and balance sheet 2 using the periodic statements in the middle. Everything has to flow through accurately. Okay, and if you have a mistake, simply go to single entry accounting. Okay, that's what I always tell my accountant friends. Oh, I can't get it to balance, just make a single entry. This is accounting. Pardon me? Well, no, it's a 2-entry system, but my point is, if something balances, you just make a single entry, it'll balance. And then, what is the most basic waterfall? The income statement. You have revenue, but remember, revenue does not equal revenue, sale does not equal sale. Okay, but think about this for yourself. Think about your own waterfall. Is it fair to say most of you work or do not work? Do not work. Okay, if you did work, okay, you work in the U.S., who takes your money before you receive it? The government. So you have your total gross income, you pay your taxes, maybe you pay your 401k or 403b. Hopefully it's a 401k because you're here. Why am I differentiating before a 401k and a 403b, and why do I want you to work for a company that offers a 401k over a 403b? 401k is a for-profit, which means your salary is going to be higher. 403b is not for-profit, but it's the same. Selling G&A expense, I can tell you from being an employee and being an employer, if you make $100,000, how much do you think you make? $100,000. But me as the employer, how much do I view you as earning? $125,000 because of burden. Okay, so there's always going to be a different perspective. You're coming to me saying, I earn 100, I need more. I'm saying, really, you're costing me 125 or 130, you're plenty. So make sure that you can look at it from both perspectives. EBITDA, and then EBITDA is the last non-accounting adjustment. Have you had a class in corporate finance? So you've done corporate valuations, which is basically just an EBITDA multiplier for an investment bank. Okay, what is the synonym in real estate to an EBITDA multiplier? You have not had your real estate class, is that true? Okay, it's called a cap rate. Okay, when you do a valuation at a corporate finance, it's EBITDA times the number. When you do a valuation in real estate, it's NOI divided by a number. That number is capitalization. Exact same concept, just real estate has to be different, so they reciprocate. But it is the exact same concept. And in real estate, EBITDA is basically NOI. Okay, revenue and expenses. Revenue is simply wages times the sales price. Expenses are simply just that, wages times the cost, and a direct cost. SG&A, just remember that SG&A, when you're looking at salary, you have a burden. Okay, $100,000 may be what you're earning, but it's costing your employer $125 to $130. Depreciation and amortization are going to be non-cash expense. you're trying to capture or you're trying to allocate expenses to the period for which it's used. For instance, a $100,000 car, you're allocating $20,000 per year, even though you paid $100,000 in year one. It would hit the cash flow as $100,000, but it would hit the income statement as 20 over 5 years. Again, you can appreciate it without. Yeah.
Sometimes heard that research and development gets kind of allocated as capital, not as an operational expense. Is that normally?
It depends, and I don't want to get too in the weeds because I'm not a CPA. Okay, but it depends. It's the tax expert. I also don't like to spend too much time on things like depreciation and taxes. The reason being is because we have such a multinational group here that many people aren't going to be in the U.S. I don't want to focus too much on U.S. as well, especially since we're going to IFRS anyway, which is an international standard. Income balance sheet statement. So again, all we're doing is looking at shareholder equity, and I'm expanding shareholder equity into the various components. Statement of retained earnings, quantified amount of firm's earnings kept rather than paid out in the form of dividends. Now, you as an investor, when there are retained earnings and when the retained earnings are growing, you want to constantly challenge management. What are they doing with the undistributed cash flow or dividends? Okay, again, you always want to challenge, because if they're not doing anything, like Microsoft, like Apple, distribute. Statement of cash flow, it is a key statement. I would even say it is the guts and glory. Many times people do an analysis without doing it. I don't know how you can do an analysis without a cash flow, because one thing it tells you, are you a net cash producer or user? Okay, 3 different sections you have: operations, finance, investment. Operations basically going to say, do you produce cash or do you use it? Investments, purchase or sale of large capital items, and then financing, issuance or buyback of equity or debt. Okay, very, very simple. But how are you funding your operation? Are you funding your operation through the additional equity sales, through additional debt sales, or are you adjusting your capital stack, or are you funding through ongoing operations, which would be a positive operation? Statement of cash flow key, I told you about the 3, shows principal inflows and outflows. And then cash flow income, revenue and expense differ. Remember that income, which is basically an earning, is an accounting adjusted number. Cash is not. You pay your employees with cash. You feed your investors earnings. So you think about it that way. You pay your suppliers with cash. Your investors, especially your large investors, are looking for levelized earnings. Cash flow types, when you're actually building it, I like to think of it as direct and indirect. Direct is going to be basically a cash-only income statement in a bastardized form. Indirect, you're taking your net income, adjusting for non-cash expenses, and then going through your 3 statements, or your 3 taxes. And then cash flow funds from direction. Just notice we have operations, we have investing, and we have financing. And then operations, again, cash from the core business. Are you making money? Very, very, very important. Okay? Does the entity make money, or is it financing through issuance of debt, issuance of equity? Now you can call it the guts and glory. Investment, payments to maintain or increase current operating agreement or current operating conditions. You want to look at what is happening in investment. Are you funding yourself through asset sales? Because that cannot continue into perpetuity. Okay, there needs to be a limit. If there are asset sales, you may want to bring them below line. Okay, because you might want to look at it as what can happen on an ongoing basis. Is it reactive or proactive when you're selling an asset? I'm generally bullish if it's proactive. I'm generally bearish if it's reactive. Are you selling because you have to, or because you want to consolidate or refocus your core competencies? Financing, additional financing activities. Firm obtains cash from short and long-term borrowing. This is very important. If you're issuing debt, you want to understand what is the duration. You guys have had a class in fixed income, is that correct? Yes? More or less?
I know duration. We know duration.
You know what duration is. Make sure that you understand the duration of both the assets and the liabilities for the corporate entity. That would be something to look at for Orangetown. Okay, think about a bank. What is a bank? You guys have had Andorf, right? Great, great gentleman. Okay, what is the greatest risk? You have an asset duration liability duration mismatch. That's one of the reasons why you may have a 30-year amort but a 10-year balloon. What are they trying to do? They're trying to pull the asset duration to the left. Trying to pull it to the left. Okay? And then what are they trying to do with the assets? Why do they want you in 3, 5, or liabilities? 3, 5 certificate of deposit? They're trying to push out the duration of the liabilities to match those durations. Okay, that's the greatest risk. Now you want to take a break. Weren't you the one saying no?
I was the one who was saying yes, half an hour.